Hi, welcome to the Market Alert for Friday the 30th of September, the last day of September for 2016. So yesterday we're looking at the 29th activity. We get the short market moving down. This produced 56 points in profit. We had the market driving through the scalp and then sitting on the psychological line there of 18,300 before then moving down. And again, it allows you to trail the actual stop down at 50% above, even starting with this point here, and then the lower high there down, and then eventually being stopped out at the 18,280 level there. So nice profit from the start, and that was enough for me. I didn't actually participate in any of the other part of the session, but you can see how the plunge protection team came in. The fall off here I'll talk about it in a minute, and then the market was brought back, and then there was another sell at the end there as well, but I didn't trade the second half of the session, just the first part there. Then the market became quiet. We all know what the problem is, and I'll come to that in a minute. So we've got this sideways situation here. We've got a very big increase in volume during yesterday's session as well. So there's definitely something, again, as I keep going on about, there's a problem on the downside. The selling always increases. It doesn't increase on the upside. And that, no doubt, in this bar here where we do see an increase is going to be one of short covering. I'll just put the crosshairs on and I'll show you the bar I'm on about. So we've got this bar on the downside. We've got this one reversing back to the upside. And then we've got this one. You can see how the selling increased again on the downside, and this is the problem. People are trying to get out of the markets, and in fact there's an article on Zero Hedge that shows over 200 billion was taken out of the markets during last month alone. So an interesting picture there in the volume if you just look for the clues, and again yesterday you can see the market down, or increasing volume on a down day. News, what have we got today? Nothing major at all in a nutshell, and that's probably because we've got other issues going on in the background, such as this Deutsche Bank dead broke, and 1088. They did ramp the market up yesterday. I mean, it was started out at what have we got, 1106 all the way down to 1080. Still hasn't taken out the low that we saw earlier on in the week at 1020, but that may be on the cards because the run begins. Deutsche Bank hedge fund clients withdraw excess cash, and this came off Bloomberg of all places. It came from the mainstream, who were actually citing this. It's the normal run of events when a bank's in trouble. Everybody wants to get the money out, and it starts with hedge funds all the way down to the likes of ourselves who want to get some cash out before the bank disappears. I don't think it will disappear. My concern is the 47 trillion in derivatives. It's not the liquidity of the bank, because Merkel, even if she said she won't, you bet your life she will. If need be, there will be some sort of bailout or bail-in or a combination of the two to keep that side of the bank going. What they do with the derivatives is what I'm concerned about. And as it says here, Deutsche Bank concerns just went to 11 as Bloomberg reports a number of funds that clear derivative trades with Deutsche Bank have withdrawn some excess cash and positions held as the lender, a sign of counterparties mounting concerns that doing business with Europe's largest investment bank. And that's the problem. It's it's the derivatives, it's the gambling instruments. One default on that, and it's like a house of cards, and there'll be a domino effect through the other banks. So that's what the concern is. On the implied volatility, 1301, up sharply as you'd expect, as there are concerns now in the background about Deutsche Bank. But like I say, I don't know. I'm sort of pulled and pushed with regards to whether it's going to go bust or not. Only time will tell on that one. I mean, never say never, but the knock-on effect would be a global shutdown in banks because of those gambling instruments. That's the problem, and I can't see them allowing that to happen. But, I thought the same with Lehman in 2008 as well, and that disappeared, so who knows. So, yeah, implied 13 in 1, showing an increase for the obvious reasons, and like I say, there's a potential risk there in the market to the downside at the moment. But again, that's another thing. Yellen's talking of actually buying stocks as well now. As I've said on many occasions, the world has gone mad, and I'm sure that the madness is going to continue as well. Right, that's it for today and for this week. I will report if there's anything else today. It could be an interesting day. I don't know how it's going to pan out because of the Deutsche Bank situation in the background, but we'll just have to play it by ear and see how the volatility is. Just have a quick look at the 5-minute chart, see what's going on, see if we've got anything moving around. Not a lot at the moment, so the market's fairly sanguine about the whole thing at the moment. We'll just have to wait and see. Right, that's it. Enjoy your weekend. Speak to you on Monday. Thanks for watching.